Okay, guys, welcome back. Sorry, the link closed. Okay, so now I was saying, after dealing with additional information, you saw how you dealt with it, you moved all the information that you had. Now you come and move line by line. Whatever you didn't touch, you touch. Okay, now begin with revenues. Revenues, there are 200 million. Do you touch? You're going to confirm if you touched. Okay. If I go to my working, okay, you know that revenues are under cost of sales. They're here, sales. We touched minus 7,000.
Yes.
Okay. The answer is that.
Yes. It was off.
Okay, so you have this as your answer. Then you move, okay, line by line. Don't rush to go to wherever. Then you have inventory. Inventory, this is opening sales. So is it 8,000? Someone kindly confirm. I think it's 8,000. So you come under your working, okay, which are the cost of sales. Inventory. It doesn't have to be in order, but if it's purchases, then you put them down. But the other ones came here. Then you continue line by line. And then the next thing is purchases. And purchases come and include, you know, they go under cost of sales. Okay, come and say purchases. Unless otherwise, okay, let's not be so fast to conclude that there's no other item. So then 72, you're done. Then you move on. Then you have trade receivables. Trade receivables goes where? Under statement of financial position. Take it there. It's 53. 53. Okay, statement of financial position. Current assets. 53,000. These are trade receivables. Okay. Then what next? We have trade payables, 27. You go under liabilities. Liabilities, current liabilities, trade payables was 27,000. You put and move on. Okay, like that, like that. What else? Bank, we already looked at it. It was an overdraft. We saw how we did it. Then you go to, okay, maybe can just go back there for those who weren't around. We say that you come and get the 60,000 that you received from shares minus the 15 overdraft. That's how you end up having a positive bank balance of 45. Hence current assets. Move on. You have distribution costs of 62,000. Distribution costs 62,000. Come under cost of sales table, schedule, stuff like that. Okay, you show distribution costs. Okay, there was 62,000. Probably this is balance brought down in this case for distribution. What's the next item? Next item is okay. Come to the schedule. You say admin brought down. I hope we're together and we are following closely. Then after admin, you have factory premises, took the balances. Okay, so we go it again. Then equity. What else? Share premium. We saw what we did. And equipment done. Accumulated with it. Equity investment reserve. Go under changes in equity. Okay, equity balance brought down. Equity reserve. We continue line by line, line by line. Okay. After equity, you have now the bond note 10%. I said interest paid. Okay, so here there was a trick. So you're supposed to come to your bond. It was 80,000. Okay, and the interest is 10%. Interest, the 10%. 10% of 80,000. Supposed to have 8,000 as interest. Okay, but now the interest that you paid, interest paid. Okay, you may go there and check it. The interest that was paid was actually, I think it was less or more. Can confirm. Interest paid on the bond was 6,000. Okay, this is what they paid, 6,000. 6,000. Okay. And I saying the interest for this, what they do is you debit interest, bank or cash. What they did. How about the balance of 2? This is how we end up with the balance of 2,002 minus 6. It's 2,000. Now the treatment of this one, so this is accrued outstanding. Outstanding interest. The interest is supposed to be that you're supposed to debit the interest expense and credit accrued or outstanding liability. So how we end up, the summary of this is that you go to your, remember this is not an entry, eh? But you're saying clearly, you're seeing that you debited interest and debited interest again. So the interest is supposed to be 8K in your profit or loss. Then they paid 6,000, but the 2,000 didn't pay. So the 2,000 becomes accrued. I hope we're together on this one. So you come under your liabilities, current liabilities, and ensure that there's an interest. Just accrued or outstanding of 2,000. Okay. Then under your profit or loss, this interest here, you're saying it's going to be the 6,000 that you paid plus the 2,000 is outstanding, which will give us the 8,000. Okay, so that's how we're supposed to treat that interest part. Okay, so we continue. So see line by line. Taxation we saw. Okay, so officially you're done with the trial balance. Now you go to your workings and move also those figures in the workings. Now in the workings we had cost of sales and things like that. So we come and get the final answers. Start with cost of sales. So you add, when you add all this, this is what you'll get. 75. When you add this side, that's what you'll get. So cost of sales, okay, these are totals, balance. You can call them totals or you can call them balance carried down. It's usually upon you. Okay, so I'll come here and say under profit or loss and the cost of sales. This figure is coming from working number 2, and it is none other than, let me just reference. So referencing 75 for 40. Sales error, we already saw. Where did we get? Okay. Thank you. Sweep up. Okay. So Mariam, up you have had sweep up. Then you go on. Now we're saying for gross profit, you add the sales minus cost of sales. Get that. Okay. Then under you add other incomes to get gross income. Gross income. Add this, you get gross profit plus fair value. You get that. Okay. Then add a loss of 2,000. Then have admin. Admin still is working number 2. Working number 2. Just like distribution is working still number 2. Okay, so just a reference. $68. Then for distribution, it's 40. Okay, so you add accordingly, you add the gross income and deduct all these expenses. So I have 24 as my profit before interest and tax. Okay, we deduct a bit. So then you remove the interest, which is 18, then you get profit before tax. Then you have 16 minus 9. This is income tax and expense. So getting profit for the year as the sum. So you have 7, 360. Let's run your charts. Okay. Good. So that is your profit. Okay. Then you bring now these ones here. other comprehensive income. Okay, just add them here. Other comprehensive incomes. So we say that one goes to revaluation surplus and another one goes to equity reserve. So these ones here, I'll give you a total of 25. Remember, these are gains, so the incomes to give you total comprehensive incomes. So you add this plus that. So our total comprehensive income is supposed to be that 32,360. Okay, now we now transfer this to the changes in equity. And transferring, they say that for gain on revaluation, it goes under revaluation reserve. Then for the 5K, it goes under revaluation, equity reserve. So we'll come under changes in equity. Yeah, and you say total comprehensive income. Okay, here we have 5,000. Reversion surplus, we have 20. Then for retained earnings, the profit was, I think, 7,360. Can we just go back to confirm? It says here, profit 7,360. Then the surplus 20, then 5K. Okay, so that's how we deal with profit or loss and end up here. Then when you're here, what we do is you get the final part, which is the balance carried down. So equity is saying balance carried down. Here just add it. So that will be our equity, share capital, share premium stuff. So this is how we end up having our changes in equity. So these ones, what is in changes in equity goes to the balance sheet, the way it is. So let me take it the way it is. Changes in equity, balance sheet. So this is my balance sheet. Add liabilities here. Let's carry them this side. Okay. Let's come back and copy this. Okay, so under our equity, we're saying so they have here. Okay, so my share, my equity, and still have to leave some lines. I'm saying equity. Okay. Equity and liabilities. And under equity, you have this. Now you bring the balances the way they are. So for equity, you can just paste them there. Let me just paste. So you copy the way they are there is the way you bring them in. Okay, and this is what you have. So then once you're done with your changes in equity, then you still now concentrate on the balance sheet. Okay, balance sheet, you have total assets. Total assets, I'll just add everything. So you add everything from top to bottom. Okay. Then under equity, you just add equity and liabilities. Total equity. So it's fill from top to bottom. Okay. They miss out. I have 26. There's a figure that I missed out. The 80,000. That was 80,000. Is the 8? The long term, the bond. Okay, under liabilities, we miss out the bond. I forgot to bring the bond. So we have long term liabilities, or you can say, how do you call it? So you say the 10% bond note. On a trial balance, I forgot to just use it in the interest. I forgot to bring the 80. So the 80 is here, it's a liability. So when you add automatically your total equity and liability must be equal to total assets. Okay, so guys, that's how we go about this. That's how it's supposed to be done. Okay, although like you saw, my reservations are on not PPE schedule depreciation. Okay, I feel something is right, but I'll ask him regarding the 5 months and 7 months and see the 6 and the 7. So if you don't have any questions, I beg we stop here since you have mentioned 2 hours and 30 minutes. Any questions you feel you want to share on IAS1, because I won't be covering IAS1 again. Thanks. Okay, welcome. If you have questions on IAS1, personal questions you feel I can help out, feel free. If you don't have, okay, well, guys, thanks for your attendance. Sonita, Mariam, Remy, okay. We're lucky to have a physical class. I'm lucky to have a physical clinic for group accounts. Okay, but I'm a bit constrained right now. I'm not sure when I'll put it. I was hoping for Sunday, but I'm seeing Sunday I'll still be badly off in my own way. So likely we shall have a physical class for what? For group accounts. Shall just look at those, they think they can say it and stuff like that. Yeah, Remy, I'll share the answer.